This is CC. Welcome to the Orbit. It is Monday, July 29th. This is Income from Options Weekly. We've got stocks slightly in the green, basically unchanged. We've been a little bit higher all morning, but we are selling off from that little bit of a gap higher. We're looking at the 1 week chart in SPX, and as you can see, it was a pretty ugly week last week. Rebounded slightly into the end of the week. We were down about 5% in SPX at one point. We're going to get into a little bit of that later, what happened to the VIX, what could happen from here. But for now, SPX, we are looking at an expected move for the rest of the week of about 1.7%, and that is 21 IV. That is much higher IV than we have seen in quite some time. And there's a couple of reasons for that. One is the weakness we saw in the market last week. Also have a lot going on this week. A ton of earnings, probably the biggest week of earnings so far this earnings season. We've got AMD, we've got Microsoft, we've got Amazon. So it will be coming in, especially starting tomorrow. You're going to see a ton of reports before the open and after the close each day. We also have a couple of big bits of news on the economic data and FOMC front. We've got an FOMC meeting midweek, and then we have the jobs number on Friday. So we're going to get a 1-2 punch towards the end of the week there. There you can see we are, zero DTE vol is about 26, which is higher than we've seen recently. That is pricing about a 0.5% expected move into the end of the day. We dipped down a little bit, but still pretty high at about 19 IV for tomorrow. And then we start going up Wednesday, 21, 21, 21 into Friday. And that's where we're getting that 1.7% expected move. And just to put that into perspective, a couple of weeks ago, it wouldn't be uncommon to see an expected move for the week of about 1%, or we've even seen some below 1% for the week. It was a 5% pullback in SPX last week. If we go to the 1 year chart, it's very similar to the pullback we saw in the market this spring around April. It was about 5%. The VIX got up to about 20 in that sell-off, just shy of 20, and then stocks bounced and they continued higher on that trend. That's exactly what we saw last week. And we saw the VIX get up to about 19.5 before we reversed at the end of last week and took us up about 1.5% right now in the SPX. Now, whether that was it, and it's going to be very similar to April, remains to be seen. But the sell-off to look at before that was last fall's, and that was closer to 10% of a pullback in SPX. And in that case, we saw a couple fits and starts. It probably took about 3 sell-offs, 3 bounces to complete that 10% move lower. But in that case, we saw the VIX get up almost into the mid 20s. We saw it up above 22, get up to like 23, and then we saw a bottom. In even uglier sell-offs, you see the VIX get up to 30. So it's not necessarily that it's always a buy signal when you see the VIX at 20, but a lot of times it is a potential short-term, at least, buy signal, and that's what happened last week. Now that buy might not last. It might only last a day or two, because if this turns into a more significant 10% correction, then you're going to see those sorts of down 5%, up 1 or 2%, then down another 5-6%, then up 2 or 3%. You see it play out that way. And in that case, that's where you see vol continue to get higher and higher and higher. And then your capitulation bottom in the VIX may be something closer to 30 in that instance. So just some background on using the VIX and sort of using these 5, 7.5, 10% sell-offs in SPX. The Qs, on the other hand, we got down almost to 10% sell-off last week. So it was a much more significant sell-off in the Q. For the week, we've got this 1.7% expected move, an iron condor set to those levels. Let's go out and select Friday the 2nd, 53.70 on the short put and 55.55 on the short. And let's look at this on the 1 month chart so we get a sense of some of these levels that this is implying. We're taking this out a little bit wider. We are still shy of those highs where we saw, the SPX get up to 56.50. And but this gives you a sense. This is risking this is risking 300 to make 200, and we are about 100 points in either direction here on this condor that we're looking at. As far as 0 DTE, let's go in there and let's look at the iron condor levels set at the expected move. And you can see it's sort of framing the last couple of days. Let's take this out a week. So it's only really framing the last couple of days. You can see that on the downside, it is not getting down towards those lows we saw on Thursday. But if we take it a little bit wider, and let's get this down to like the 4-to-1 risk reward ratio, and there we are. That takes you down to that 54, 25, 55, 05 to the upside. So you are, 0 DTE, you can be around that 4-to-1 risk reward ratio on a condor at about 40 to 45 points in either direction. And again, going out to the end of the week, more like 100 points in either direction. Now, again, that incorporates the Fed meeting on Wednesday and then the jobs number on Friday. So what will typically happen in a week like this is we will see volatility at least hold. We're starting off the week with higher volatility than we've seen recently, at least hold, and if not increase into those events. When we're going into the Fed meeting, it is less so about, are they going to shock the world and lower rates? Probably not. The market is pricing in almost zero chance of that happening, but they could really indicate just how aggressive the market's expecting them to start lowering rates into the end of the summer, into the early fall. We don't know how aggressive they are going to be on those things. And the jobs number on Friday will be that 1-2 punch where if the jobs number comes in a little bit cool, then you might see a more aggressive Fed. If the jobs number comes in very strong like it has been, and the revisions aren't too bad going back the last couple of months, then you might see a very conservative Fed in their lowering of rates in the fall.